The FOMC meeting just handed us the blueprint for the 2025 crypto bull run. The Fed held rates steady, confirmed rate cuts are coming, and dropped a massive hint about slowing quantitative tightening. But what does this mean for Bitcoin, altcoins, and your portfolio? Buckle up, we're diving deep into the Fed's playbook, why liquidity is about to flip bullish, and how this sets up crypto for a historic 2025. Smash that like button and subscribe if you're bullish. Don't forget to join our Discord and Twitter for more alpha. Links are in the description. Now let's take a quick look at the markets. Bitcoin is currently hovering around the $84,000 support level, which remains a key zone to watch. This level has been tested multiple times recently, making it a crucial short-term support. A breakdown below could lead to further downside, potentially pushing the price toward the $77,500 area. On the upside, the red shaded zone around $90,000 to $92,000 has acted as strong resistance, rejecting previous attempts to move higher. Recent price action also shows declining volume, meaning any breakout in either direction will likely require a strong volume push. Bitcoin is still struggling to reclaim key resistance levels, and a loss of $84,000 could accelerate selling pressure. However, if buyers step in and defend this support, there's a chance for a move back toward the $90,000 to $95,000 resistance range. Bitcoin remains above a critical ascending support line on the weekly timeframe, a trend that has sustained its rally since 2023. A successful defense of this level could fuel renewed bullish momentum, potentially setting the stage for another move toward all-time highs. Alright, let's get to the business. The Fed kept interest rates unchanged for the second straight meeting. No surprise there. Wall Street priced this in weeks ago. However, Jerome Powell and the FOMC just confirmed they're planning 2 rate cuts this year, slashing borrowing costs by 50 basis points. That's huge, because it signals that the Fed sees inflation cooling and economic growth slowing. They even downgraded their 2025 GDP forecast to 1.7% while raising inflation expectations to 2.7%. Stagflation fears? Maybe. But Powell made it clear, this isn't the 1970s. The Fed still believes inflation is transitory, meaning they're not hitting the panic button. And for crypto, that's a green light. Rate cuts equals cheaper money equals more liquidity flowing into risk assets like Bitcoin. Now, let's talk about the real story hiding in plain sight. The Fed's decision to slow quantitative tightening. Starting April 1st, they're reducing Treasury runoff from $25 billion a month to just $5 billion. Mortgage-backed securities runoff stays at $35 billion, so QT isn't dead. But this shift is a game changer. Let me break it down. When the Fed runs QT, they let bonds mature without reinvesting the cash, which sucks liquidity out of the system. But by cutting Treasury runoff by $20 billion per month, they're leaving an extra $20 billion in the financial system every 30 days. For crypto degens, that's $20 billion less being vacuumed out of markets. And there's more. The Fed's balance sheet is still sitting at a monstrous $7 trillion. Even with QT, they're not tightening aggressively. This isn't 2018. Powell is playing it safe, buying time to navigate Trump's trade wars and debt ceiling drama. And that's exactly what crypto needs. Less liquidity drain, fewer shockwaves, and stability for institutions to keep stacking sats. This cycle isn't just about retail anymore. ETFs, corporations, and sovereign wealth funds are already in the game. BlackRock's Bitcoin ETF is accumulating faster than coins are being mined. MicroStrategy keeps finding ways to stack more Bitcoin. Nation-states are hoarding crypto as a hedge against dollar instability. So when the Fed flips the liquidity switch, this bull run could go parabolic. Institutions aren't waiting, they're front-running the pivot. Now let's address the elephant in the room, stagflation. The Fed raised its inflation forecast to 2.7% and cut GDP growth to 1.7%. But the real concern isn't inflation, it's government policy chaos. Trump's tariffs, trade wars, and debt ceiling fights are muddying the waters. Powell's response? Slow QT, stay patient, and let politicians clean up their mess. For crypto, this means fewer liquidity shocks and more time for Bitcoin to cement its role as digital gold in an unstable macro environment. Of course, permabears are screaming stagflation doom on Twitter. Some call this QT slowdown meaningless. Let's debunk that. The Fed's balance sheet is still at $7 trillion. Even slowing QT by $20 billion per month adds up. By December, that's an extra $240 billion left in the system. This isn't nothing, it's a liquidity tailwind hiding in plain sight. And remember, crypto moves fast. The Fed's liquidity changes take 12 to 13 weeks to fully impact markets. Mark your calendars. Late Q2 could be when the dam breaks. By then, rate cuts will be on the horizon, debt ceiling drama will be over, and Bitcoin could be primed to smash all-time highs. Yeah, the setup is looking insanely bullish. The Fed is laying out the perfect conditions for risk assets to thrive. Increasing liquidity, upcoming rate cuts, and a weakening dollar create the ideal conditions for a massive crypto run. Gold's breakout confirms that capital is seeking hedges against fiat debasement. And with bond yields sliding, there's even more incentive for money to rotate into high beta plays like Bitcoin and crypto. We've seen this pattern before. Macro liquidity cycles drive Bitcoin's major rallies. If history repeats, new all-time highs aren't a question of if but when. Will there be bumps? Sure. But by Q3 the macro stars align. Debt ceiling resolved, QT slowing further, and rate cuts on the table. When the money printers finally go, you'll want to be positioned in Bitcoin and a few high-conviction altcoins. FOMC meetings often mark key turning points in the market, and I believe yesterday's was one of those moments. The path ahead looks promising. I've mentioned the possibility of another dip, but I'm now leaning toward the idea that the lows are likely behind us. We might still see some volatility next month on tariff headlines, but I expect no more than a short-term retracement. Bitcoin should break through the $92,000 resistance. If it reclaims that level, we're officially in "we are so back" territory. Let me know in the comments, where do you think Bitcoin ends 2025? Thanks for watching, and I'll catch you in the next one.